Hello and welcome to our comprehensive overview of the equity markets alongside our fixed income analysis. Let's dive into the key highlights and trends that shaped markets this week. In the regional equity markets, we saw a bullish sentiment across the board with a median return of 0.5% for the week. Tanzania led the charge, posting an impressive 15.4% week-on-week return, making it the best performing market. Conversely, Mauritius lagged behind, registering a 1.2% decline. Kenya was a standout performer, posting a week-on-week average return of 2.3%. This brings the year-to-date performance to an impressive 22.8%. The Nairobi All-Share Index rose by 2.3% to close at 113.10 points, indicating bullish market sentiments. Trading activity in Kenya surged significantly with a 153.2% increase from the previous week, reaching 2.2 billion shillings, up from 881 million shillings. Foreign investors played a substantial role, with their participation rate increasing to 51.1% of the total market activity. They remained net buyers, contributing net inflows of 547 million shillings. Now, let's take a closer look at the stock performance in Kenya. Safaricom was the most traded counter, accounting for 41.1% of total market activity, with an aggregate turnover of 916 million shillings. Bullish sentiments among foreign investors was particularly strong for Safaricom, resulting in net inflows of 478 million shillings. On the other hand, KCB Group experienced bearish sentiments from foreign investors, with net outflows amounting to 70 million shillings. Overall, the Kenyan equities market demonstrated robust performance, supported by increased trading activity and significant foreign investor participation. The positive trend in Safaricom highlights continuous confidence in key market players, while the broader market shows resilience and potential for growth. Turning to the fixed income market, treasury bills were oversubscribed, though the subscription rate decelerated to 100.2% from 194.8% the previous week. Demand was particularly high for the 182-day paper, which received bids amounting to 11.6 billion. This demand is attributed to elevated real yields amid a peak interest rate environment. In the primary bond market, the 15 billion tap sale of the reopened bond was largely undersubscribed, with a subscription rate of 47.4%, amounting to 7.1 billion shillings. The Central Bank of Kenya accepted 7.03 billion, representing a 98.8% acceptance rate, with an average rate for accepted bids at 16.2%. The undersubscription is linked to cautious investor sentiment amid prospects of delayed rate cuts. The 91-day Treasury bill rate witnessed a slight increase of 0.8 basis points to 15.95%. Meanwhile, the accepted average yields of the 182-day and 364-day paper also rose by 4.6 basis points and 9.4 basis points, respectively. In the secondary bond market, the value of bonds traded decreased by 22.3% week-on-week to 22.4 billion shillings. The 1-year yield surged by 9 basis points, while the 9-year yield eased by 77 basis points. We anticipate a progressive yield curve flattening at the short end of the curve over the near term. Globally, the US dollar weakened by 0.2% against a basket of global currencies due to easing US inflation data, raising hopes of possible rate cuts. However, key central banks remain committed to keeping rates higher for longer. Yields on the 2-year and 10-year US Treasury papers recorded mild increases, reflecting adjustments for the higher for longer interest rate environment. Global oil prices showed mixed trends, with UAE Marban and Brent crude oil prices both decreasing by 220 basis points. For more detailed analysis and up-to-date information, follow us on our social media platforms or visit our website on the screen. Thank you for watching and see you next time.